it gets really, really tricky because their forms are different. When they send you an estimate, it will look like, what is that? And then there's like same fee but with a different name. So it's like loan estimates. I couldn't tell, like, oh, what's that? What? Hey guys, what's up? It's Sean Realty Korean Cowboy. So today I want to share with you how I would shop for a lender to pay the least amount of the lender's fee and the lowest interest rate and monthly payment and everything else. I mean, we want to save money. I want to save money for myself and I want to save money for my buyers. Wouldn't you want to save money? So here we go. I'm going to put the template email that you need to send out to multiple lenders that you are comparing with. Hopefully on the same day, if you can do this the first thing in the morning so they have time to respond to let you know about today's rate, because that's important. Interest rate could change multiple times throughout the day. If you compare the lender A today's rate and lender B tomorrow's rate, it's hard to compare because that in between the rate could have been changed, right? So I'm going to basically give you the template so you can copy and paste and plug in a couple of the numbers, the date, your assumed credit score, and the purchase price, the loan amount based on how much down payment that you're going to put down, and then it should pretty much like spit out. And if they're experienced lenders, hopefully they'll get back to you on the same day with the same kind of data. So I'm gonna kind of go over, but once you see the attachment below, you will see where I'm going with this. So the first one is, what will be the rate, the interest rate as of today that I can get? Assuming my credit score is 700 or 750 or 800 or 650, the different lenders probably going to have a different fee structure depending on the credit score. So it's important to know your credit score and what they can offer. And again, going back, it has to be on the same day. Otherwise, it doesn't make any sense. You can't compare it because the rate could have been changed. Some lenders will ask you to fill out the application, but you don't want to do that right now because you are in the phase of comparing between the lenders. If you fill out an application, that means more likely they're going to pull your credit score. But if you do multiple credit check on the same month, your credit score could be dinged. So you definitely don't want to do that more than two times a month. Preferably, you go through this process and you pick one lender, maybe two, and have them pull your credit score so you know exactly what you're going to get. The second thing is monthly payment, principal and interest without tax and insurance. So what I'm saying here is that you don't want to get confused by the tax and insurance that they're going to estimate based on what kind of homes you're going to get. So just say exclude tax and insurance of the home. I just want to know the monthly payment of the principal and interest, and you can actually then compare apple to apple. Question 3 is, assuming 30-year loan, what would be the total interest payment for the life of the loan? And I think this is a great question to really see how much interest that you're going to pay. So for example, like $500,000 loan in 30 years, you're going to pay about close to $300,000 in the interest rate alone, which is a lot of money. So to give you an idea, when you buy a $500,000 home in 2020, in 2050, when we have like gray hair and we're like wrinkles, you've paid about close to $800,000 with the purchase price, the principal, and the interest for 30 years. That's not even including the property tax and insurance. So it's going to go up even higher. I don't have the number. But what I'm trying to say is, if you can find out in the early stage, before you even write an offer, Would you want to know how much these certain lenders will charge certain amount of interest total payment? I mean, the comparison that I have, I believe there's between the two lenders that I work with, there's about $6,000 difference in 30 years. You may say, hey Sean, that's not even that much. If $6,000 is $6,000, I mean, you can go out and eat every day for like months. The next question is the total lender fee, not including recording, appraisal, and title insurance. And those things are typically pretty much the same. I mean, the escrow fees are pretty much standardized, and the appraisal fee, depending on what kind of time frame that you request, I mean, it could fluctuate a couple $100, but not too much. Title insurance the same way. But the total lender fee is where it could make couple $1,000s difference in the beginning stage when you are like tight on your budget, try to put more on down payment. If you can pinpoint and compare apple to apple or orange to orange, it's going to save you in the beginning $2,000 is going to be way more than $6,000 30 years later. So I think comparing like that is really good. The last question is the total closing cost, not including the escrow fee, tax reserve, insurance, and other prepaids, meaning those things are going to be pretty similar. But the total closing cost may reveal some of the hidden cost. I mean, they all try to do the right thing. I mean, the lenders that I work with, whether they're credit union or brokerage or bank, they want to do the right thing. They want to earn your business. However, what they can offer based on their institutions that they work for, they might be limited to certain percentage of the lender fee, certain rate of interest rate. So they can't really give you more than, even though they do want to, but they can't because of their back end company. And so you're basically comparing not the people in the face, the front people, the loan officers, you are comparing their back end. It's not about the people. People all try to do the right thing. I mean, a lot of times, most of the times, but like I said, you're comparing the back end. The servicing back end, and that's where you're going to see the difference. If you send this email the first thing in the morning to the lenders that you're comparing, then you're going to see the difference. If you don't, it gets really, really tricky because their forms are different. When they send you an estimate, it will look like, what is that? And then there's like same fee but with the different names. It's like when I look at two or three of different lenders, loan estimates, me as a real estate agent doing this for like 12 years now, I couldn't tell like, oh, what's that? What? So I ended up making this list for my buyer a couple of months ago. So hopefully this was helpful. If you like this video, please subscribe and hit that like button so that I can share with you more information like this. I doubt that you're going to see more of the videos like this once you bought a home, unless like 7 years later, oh, who was that guy? Like compared the lender. But I guess the more support that you give, the next generation buyers are going to benefit from information like this. So I hope you enjoyed it. If you have any questions about comparing the lenders, and especially in Oregon real estate market, I'm here to help, and I hope to grow a team. So maybe by the time this video reaches you and you have questions, maybe my teammates could answer your questions. But I'll put the contact information below, and happy lender hunting, and then happy house hunting. One thing I forgot to mention is that this is assuming that you're comparing the local lenders. Now, it's not always about the fees. The lender's reliability sometimes is way more important. So let's compare with one of those 1-800 number somewhere out of state. They're like the volume lender versus local lender who works here in town. The non-local lenders may not know exactly if there's any additional fees, if there's anything that they should include or not include. So it end up making a sort of like a clunky mistakes at the end. If it's an obvious mistake of their part, they may actually give you credit or try to make it work. But just trying to save the fee, going with out-of-state lenders can be a little bit more dangerous. The other thing is that if you're in the multiple offer situation, and for the seller's point of view, when they look at 2 different offers or maybe 10 different offers, if there's a number 1 and 2, one is from the local lender who's been doing business for 20 years versus internet lender who is like one of those like R or Q, or I'm not going to say which companies, but they may go, and their realtors may go, well, these guys shown their track record in our state, in our market. These guys, I'm not so sure. It could be a little tricky. It could come down to that. Real estate is very local driven, data, information, decision making, and all of that. You probably wouldn't hire a California realtor to buy an Oregon home, right? Kind of goes that similar idea with the lenders too. The local lenders representatives will know exactly what's going on in the current market and what it takes and what needs to be done in order to close the loan without scrambling in the 8th or 9th innings if you play baseball. So I think that's where the value is. So this comparison is based on you're comparing the local lenders, credit union or whoever that you're in contact with, whoever that your realtors are recommending, or whoever you found on Yelp, Google, wherever. So I think the track record is really, really important, and experience is really important when it comes to the lender, just like the realtors.